Alright guys, welcome back to Only Divergences. In this video, I'm definitely not going to say I told you so, but I will admit that in the weekend video, I did outline a potential scenario where the NASDAQ would come down here to this trend line, the QQQ would come down to it, and that could be the start of a divergent high. So that scenario was looking far out. It was not about something that was going to happen on Monday, and I said I was comfortable being wrong here. And with a reversal like this that we saw, this pretty much negates that potential, right? Because we would have wanted it to come down here and then move higher. This quick reversal on Monday and then follow up today really does negate that potential scenario. And this was just a contingent potential scenario. We talk a lot about contingencies on this channel. Sometimes it pans out perfectly, like for most of October and November. Other times, not so much. And that's why I don't get married to these ideas. I just use them to test out theories and hypotheses, adjust those theories, and ultimately grow. So just a quick reminder that nowhere in the video did I say that we would get a Black Monday. The thumbnails are clickbait, all right? And you know what? It worked because I got more views than I ever had. When I'm right and make money like I did last month, I don't get any views, but when I say that the world's coming to an end, I do. So that says a lot about YouTube, doesn't it? Right? It also makes me wonder why so many people do post doom and gloom videos. Maybe it's just because of the views. Anyways, moving on, guys. On Monday, we turned right around. Here we had a little bit of a dump on at the open. Let's see if I can pull this up here. Yeah, so remember on Friday we had that pop. And then Monday we opened here, had a bit of a dump, held this important level here, and then we moved higher. And then today we just completely took off. Wasn't able to get up to this 400 level, oddly enough, which is understandable because we're up. You know, the market isn't closed yet, but I've got some stuff I got to do after the close. Market's up about 3%, or at least the QQQ is, and that's very high in terms of standard deviations. I think that's somewhere in the top 5 up days for the NASDAQ this year. So, you know, you're basically pushing the limits of what you can expect in one day here. So for the purposes of the potential scenario that I outlined on Saturday, it does not play out. This is completely negated. And as I always say, guys, you have to manage expectations. Okay, don't get married to these ideas, don't get emotional, and plan for all possible scenarios. And also, this is really important. Learn how to be comfortable being wrong, at least from time to time, and make sure that when you are wrong, that loss is small. I was not long or short going into Monday. Okay, I was just looking at some potential scenarios that were well far out. And now that the dust is cleared, we can take another look at what may happen in this market. Again, may happen. It's really important that you understand this is not financial advice. We're just testing a theory with this these momentum indicators. Now in this video, I'm just going to really focus on two things, right? The first is this QQQ trend line, which you know, it's significant that we couldn't even get down to it. And the second is I just want to talk about the Fed a little bit with regards to their tightening cycle. So the most significant thing about this turnaround is that the QQQ had every opportunity to come down here and hit this, and yet it bounced higher well before it got to it. So this is pretty much about as bullish as you can get, right? So you have technicians who are saying, you know, I'm going to wait until it comes down here, and you didn't even get the opportunity to do so. Right, and so it's already moved higher, even with what happened to the VIX, you know, with that breakout of that trend line. So at this point, we want to zoom out, and yes, we want to look at the monthly here. This is a little daunting, and I have to break your neck to see this, but we take a look at what's going on here. So on the monthly, we are still in this initial thrust higher. Right, this thrust here, this trend line here, still hasn't broken. And we can objectively look at this thrust as starting when black starts to rise. See, that's the thrust. Similar to this thrust here, black rising shows trend strength, and similar to here, black rising shows trend strength. So all these thrusts basically can be tracked with this rising black and elevated red, as we had here, and even as we had back here. Now, what can we say about these moves? Now, both of these periods here, these are the examples that we're using, had a nice bullish moves higher, and then as black one peaked here. You can see this was the high and then this was the high here, but we had a little bit of divergence on the red. That was basically the end. And then you had some, well, one, you had periods of extended volatility, right? So if we go down here, we can see not only did we have this big move lower, but after we bounced, we had another move lower. So this was many months of sideways action before we were able to get back higher. And up here, while it was only about 4 months, it was a 20% pullback. So again, when you see this here, and you see this push, this thrust ending, that could be the signal for a break of this trend. And as we can see, we're getting closer and closer to it with every passing day. Right now, it's going to be tough to call the top, but we know contextually where we are. Now, if we quickly flip over to the SPY, one thing to know here is that, this looks like it's actually far away from a top, right? You can see that here, black was already coming down. Red was under black. You see here, red was under black, so the trend was already waning in terms of its strength well before we saw that. And the same thing can be said here too, right? While this was a bit of a blow-off top here with the volatility explosion as it was in February 2018, we can see that red still was below black, right? So if we're going to use the analog, we would assume that this trend has to continue on. Black needs to continue, and red needs to be well below black before we get these big moves lower. So while it is always fun to speculate about potential, breaks of trends, I think what I did in the weekend video was I wanted to see this come down here, and then we make another one, and then we can break that. It's always fun to speculate about that. It's not something to bet the house on. And if you don't understand that, then you have to manage yourself. We can't get married to these ideas, and we have to put them into context, right? And I noticed that a lot of people were very excited after I posted that video, and I was very, very concerned because usually when people get excited about a position, that's when things go wrong, right? Always manage your emotion. Now, given that I brought the Fed over the weekend and the monthly chart is suggesting more upside before any real 15 to 25% pullback, which, look, it will happen at some point, we have to look at the history when it comes to the Fed tightening cycle. So I'm just going to put up this chart here. And here we have a chart of the Fed funds rate, which is, it dictates all other interest rates. And we can see that since the 1990s, we've basically had 4 tightening cycles where rates have risen, and in 3 of them, we got a recession right after. But we also had major pullbacks in the market. These were actually much bigger than 15 or 25%. The most recent one in 2018 was the 20% pullback that I was talking about. If we take a look, say in the QQQ here, it was this one here, and that was when the Fed not only raised rates, but also started to taper. And so we can see that there's generally a relationship between raising rates and the market having a pullback. So if we take a sober look at this chart, then we can say that the Fed may taper and even raise rates as history suggests, and the market can keep rising even after such shifts in policy, right? Because that's what history tells us. So on December 15th, that's the next Fed meeting. We'll be watching not so much about what the Fed says, but about how the market reacts to what the Fed says. What does this have to do with the technicals? Well, longer term, if this trend is still here, if markets continue to rise, even as the Fed tapers, then yes, we can expect a repeat of these past bullish moves. But then if we see this monthly trend get extended, we want to then go down to the weekly trend to see if we have any setup that will allow for the move that we assume is coming. Remember, this is all contingent. Okay? Do not bet the house. This is not financial advice. This is just a way of understanding markets. And look, if you were with me in October, November, it worked fantastically. Okay? But you can't get married to these ideas. It's all about potential probabilities, recognizing your own bias, and being able to step aside when it matters. So I just wanted to do an update given the big reversal that we've seen, even though Tuesday is my busy day. But again, remember guys, we're still not above this 400 level. It could happen. We could turn around. I think that it's really unlikely that we'll come back to the trend line anytime soon. But you know, it's all about potentials and probabilities. All right. I'm probably going to update again tomorrow and then on Friday. Stay safe out there, guys. Take care, and I'll see you in the next one.